Guys, good morning to you. Can you hear me loud and clear? Yes, if you can, give me a thumbs up. All right. Okay, good morning to you, Janet. Morning to you, Alex. All right, morning to all of you. Okay, we're going to start today's MAO right now. Now, usually I have about 1 or 2 minutes of time before we go on live, right? But that was because I thought that I have a music ongoing. But I realized that after doing this for more than 2 months, I noticed that you guys are not able to listen to that music. So that's the reason why I said, oh my gosh, okay. So sometimes you sometimes have and don't have. So that's why I say, okay, never mind. Let's go straight to the point and do this right now. Yeah. Okay. All right. Quickly get our friends to come into today's MAO because again, I got some very powerful stuff to share with you. Now today's MAO, the content will be a little bit a lot of economic stuff. All right. So maybe some of you may find a little bit overwhelming. All right, you may find that way a little bit, but I'm sure end of the day you should be able to like it. Okay, just now quickly get our friends to come in. All right, what I also have to post to my friends also at the same time. Just quickly get our friends to join us today, this morning. Okay, all right. Morning to you, Dennis. Morning to you, Anthony. All right, let's go with our MAO right now. Okay, once again, morning to you guys. Today is the 22nd of July, Friday. Yay, Friday. Thank God it's Friday once again. Now, yesterday was an incredible day where the market did a super V shape. Now, I remember saying this to you guys many times before. In a bull market, in a bull market, right, how does the stock goes? Okay, if you remember, remember the bull market, yeah? A bull market, when it goes up, right, it goes up, it comes down, then slowly goes up. Okay, that's how a bull market usually perform. Okay, that's how a bull market perform. Yeah, but if it's going to be a bear market, usually the slam down is like this. The recovery is very sharp, and then after that, slowly you got to go down again. Then the recovery is very sharp. So that is how a bear market usually perform. All right, I can draw in a better way, but this is like the only space I have right now. Okay. So I'm trying to explain to you is this: in a bull market and a bear market, right? Why the bear market usually has a V shape? Why bear market got a V shape? Well, if you remember, if you notice this, majority of the traders are usually bullish, or they buy. Mutual funds buy, unit trusts buy, fund of funds buy, ETFs buy. So they are more to the buy side. So you think about this: if they are really want to buy for long term, they are going to buy on value, right? And you're going to buy on value, then it's really unnecessary for them to chase after stocks. Unnecessary. Which means that they'll buy very slowly, they'll just buy very slowly, and then they will just trade accordingly. There's no hurry to jump into the market and buy at an alarming speed. You understand my point? You don't need to do that. But only in the bear market. In the bear market, right, when you need to sell it fast, all right, and then create this thing called the feeling of people missing out, right? They'll sell it very fast, and then after that they'll rebound it as fast as possible, so that a lot of people will chase in to buy, so that the boys can again distribute to them. You understand? So the coming down is very slow, and then the rebound is very fast because they need to do the psychological thingy to make you feel that you miss out something. So the selling is slow, right? Because they're distributing downwards. Then after that, there will be a sudden capitulation selling, and then after that there will be a very big V recovery. You understand my point? And then after that, right, people, oh shit, I done wrongly, so they're going to buy in again, and then the whole cycle repeats. Okay, that is the difference between a bull market and bear market in a very illustrated form. But of course, you don't see this type of illustration mentioned anywhere, because this sort of thing is like only a very experienced trader or a guy who's seen the market for years can explain this to you. So I'm just sharing you here over now and let you think about it. Okay, so anyway, is the bear market really over or just about to resume next wave? Okay, so what I'm trying to say is this. Now, a lot of my friends around me right now, those who are very bearish, has started to turn bullish. As a matter of fact, right, some of my friends are looking at 32,500 right now for the Dow Jones, where they were actually very bearish just only like a couple of days ago. A couple of days ago, they were so bearish that they were looking at 29,000 to even 27,000. But because of the last 2 days, the market keep on doing a sort of recovery, right? They are now turning bullish, and they are looking at 32,500 collectively. So guys, now there are 51 of you online right now, right? How many of you think that the market is bullish right now, or you are bearish? Please key your answer right now. How many of you are bullish? How many of you are bearish? Please key your answer right now. Okay, I want to see the answer. Please do me a favor. Please key, are you bullish or are you bearish right now in the market? All right, it'll be good for us to have this interaction. Okay, Dennis, he is bullish. Des is bullish. Okay. Lee Kwok, you are bearish. Anthony, you are bearish. Angus, you are bearish. Amira, you are bull. Okay. And how about the rest? Wilson, you are also on the bull side. Okay, good. Anybody else? Do me a favor, guys. There's 54 of you right now. Let's just communicate and then let's interact and talk about this. Yeah, this is going to be fun, though. Trust me on this. Okay. How about the rest? There are so many of you right now online now. 55. Number is still moving up. Okay. How many of you are bullish or how many are bearish here? Like, key answer right now so that we can have a bit of interaction here. Okay. Okay, we have Kifi, you are bullish. Okay. All right, so from the comments on the box right now, majority of you are actually bullish. Oh, okay, that's the point. That's the point. All right, that's the point. That is the reason why people are turning bullish, because the market actually shows that no matter what bad news is going on, right, the market just rebound. Okay. So nothing wrong, no right, no wrong. Everybody got their own opinion. Everybody reserved their opinion. Cheng Hui, Sherwin, Daniel are all bearish. That's interesting. Okay. All right. So the thing is this: whether bullish or bearish is an opinion. No one is going to be right or be wrong. All right. Of course, if you are bullish and the market is going up and you're bought, that's be good. All right. So what we have now is the craziness of the economic figures. Okay. The economic figures show that a lot of problems happening right now, but the market is recovering. And I told you before, right, economic figures are always behind time. That means the market will react first, then the economic data will come in. So that's the reason why in this April, May, June, when the market was coming down and we were calling for sell, a lot of people cannot buy it because they say that the economic figures are okay. What's the problem? Then, of course, when the market keep on coming down, people get question mark, right? Okay. So now July comes in, the stock market has kind of bottomed out a little bit, and then the economic data are coming in and all quite negative, right? People confused. How come the data is so bad, but the market is actually the other way around? Because the market always move in advance. And why market move in advance? Because the boys know this in advance. They won't want to wait until the data come out, then they react. That will be very silly. They will go in first. They will react first before the whole thing happens. So that is the reason why it's very difficult to explain fundamental with price action together at the same time. It is not really feasible and possible. Okay. Now, The thing is this, we just saw ECB increasing rate hike. Now, last night, one of my very old students contacted me on the site and asked me, Kel, what do you think about the ECB rate hikes? And I was just telling her upfront, I said, look, it will be a big one. And truth be told, it was a 50 basis point, no, not 25. The market was anticipating of 0 to 25, but ECB stunned the market. Not my opinion. I expected that to happen with 50 basis point. So why would ECB do that? Because ECB in the current situation right now is that in a very precarious position whereby the market the whole economy can collapse. But because inflation is really at the high level, it's even much higher than US. So there's no choice. They still have to do what they need to do. So that's the reason why. So with all the negative news right now, right, why the market goes up. Later on in the alternate market news, I'll explain to you why the component weightage of the stocks itself carries a lot of weight to explain the current situation. And of course, there's ongoing grapevines. I repeat, grapevines saying that, right, there could be a further outburst in the Ukraine-Russia war right now. Now, of course, there's some ongoing undercurrent saying that Ukraine is going to lose this battle and likely Russia is going to go all in, and of course, crude oil price can go higher. But we don't see that in the real world. You know, that's the point. So again, a lot of things is going to question mark itself. I'll explain to you later today. Okay. So disclaimer apply as usual. Thank you to AIMS once again for being our co-sponsor. They are being sponsored, for our product here itself. And I'm very sure AIMS is one of the better brokers in the market. So do contact us through AIMS. Do contact us if you want to know more about AIMS itself. We are here to assist you. All right. But of course, once again, whenever we talk about this, that some people will say a lot of nonsense stuff and say stuff that is really ridiculous. But I say, no worry on that. Things are still going fine. And we are definitely in the right position. Yep. Okay. Right. Now, Wall Street, joke of the day. Now, that's bear. What is bear, by the way? Bear is as in, no, bear is in Bitcoin, E as in emerging markets, A as in lots of euros, and R as in Russia. Okay, in fact, this is pretty cool, right? We've been telling you Bitcoin is actually a problem, and we can see that Tesla made the very smart step to remove themselves away from Bitcoin. Because the moment Bitcoin goes lower, definitely this is going to affect Tesla. And of course, Tesla, as it is last time when they bought Bitcoin, and when Bitcoin goes up, right, their share price went up. So they make the meal of it. Now they just quietly sold off Bitcoin, nothing much to talk about it, and the market just sweep it under the rug, and just okay, that's it. So now the biggest holder now is Michael Saylor, right? Obviously, right? He's the one who's going to buy more Bitcoin, according to him. So I wish him all the best, because if Bitcoin goes below 18,000 again, right, he'll be in serious trouble. All right. Now, of course, we also have these emerging markets right now, which is actually having a problem right now because they are the one that carry a lot of stress on their assets. So obviously, the main gist is this: they must maintain, and if they are not able to sustain, there could be some selling. Euros, obviously now, there's a lot of flooded euros in the market because of the depreciation of the value. But of course, yesterday when the rate hike, there was some recovery. And in fact, I told you, right, euro at parity was a buy. And because of the of the low level, I told you that if you want to buy some euro, you can buy it now at parity. And of course, yesterday plus the rate hike, right, the euro went back up again. So again, when people get scared and fearful, right, you just have to walk over and collect some money from the market. And of course, whether Russia would that be the catalyst to hurt the market again with his crude oil, we'll let the market decide. Yeah, but definitely this BEAR bear has a lot of meaning towards it. And of course, in my opinion itself, right, I don't think we are out of the woods yet. Okay, let me explain more in detail shortly. All right, so this is the earnings season right now. We all know that Snap came in. Okay, the result shows that Snap shares plummeted as advertising demand slumped. Okay, and of course, American Airlines returned to profit. Okay, because of the reopening of the what you call all the flying and stuff like that. So from here itself, we can see that we have finished the big one. Later today, before market open, will be Twitter. Now, Twitter is going to be interesting, right? Twitter will be very interesting. I expect Twitter share today to be down. I expect Twitter share to be down today. Okay, let's do a Twitter share right now, just a quick one. Twitter. Okay, so we can see that Twitter has been recovering nicely because of the recent potential of the deal resuming, and of course there was some there's some buying into the social media like Netflix, right? So Netflix went up recently, and that's why you can see Twitter recovering. Now Twitter recovered from $33 all the way back to $39, but $39 is a very, very strong resistance. So $39, if it can break, obviously the next number we can see could be as high as 43. But I'll be honest with you, as long as there's nothing to come up from the Elon Musk Tesla deal, I don't think there's any good reason for Twitter to go higher. Because if let's say Elon Musk is pretty accurate and correct regarding about their huge, bigger than normal zombies account, then of course there is a very good chance that this Twitter can go back down to $30 if it's proven real. But of course, such a thing to be done, right? There's a lot of legal lobbying to do. So I don't think in the near term we see 30, but to see 43 is that right? I also cannot see that. So I think that $39 will be a good price for you to consider to just get out, build out first, and see how it goes. Now, I'm not a fan of Twitter in a way, so I will leave it there. But my point is this: for Twitter to be to have a better result, right? I don't think so. But just again, let's take a look later on. All right, that is for Twitter. Okay, let's continue, and then we're gonna have is this. Okay, now yesterday I wrote to a group of my own close community. All right. And I told them about my view in the market. So let's take a look at what I share. And then after that, I'll tell you my view of the coming month, right? So on the 25th of July, which is yesterday, I wrote a little writing to a group of my very close trading kakis. And I wrote there, right, that is an imaginary support at about 31,780 for the Dow Jones, right? And then I put there, it's a non-TWB thingy because obviously it's my personal field. And I say that if the market actually stays above it, the Dow Jones can recover back to 32,000, right? It was actually specifically there. And of course, I wrote there as well, right? The current situation now that we are in is exactly the same field that we have in December 2021 before the market peak in January 2022. Okay, let me just bring to you the Dow Jones support first. Yeah, take a look. Now, this is the Dow Jones support of yesterday. Okay, yesterday, this is the 31,780 level. Okay, the one that I mentioned, you can see over here. Okay, so the Dow Jones really at the start of the day came down and touched the 31,780 very nicely, and then it went all the way up again. All right, Eugenio, thank you very much. Okay, thank you for that. All right, thank you for the spot on. Thank you. One to you, Sharif. All right, and then after that, the market came back down again, and again at 31,780, it stops there. And then after that, you notice that it went up again. So it seems like my 31,780 is pretty accurate, right? Then when the news came out, when ECB came in the news and the data from the US, the employment side, right? We have a sell-off, which is thought that that will be the selling towards the next number, 31,500, and the market missed the 500 mark just by a little bit, okay? Now, after that, you can see the market strongly rebounding above it, okay, all right. But what's scary was here, take a look, everybody, look at it, take a look. The market actually really came down and touched my beautiful 31,780. No more, no less. Look at it. Look at it. Oh my goodness. Look at the way it stopped there. And then after that, what happened? The market rebounded and went all the way up to 32,000, the same level that I mentioned just now on my drawing, on my writing there. So don't you find that this is very scary? So after seeing this, right, you're like, wow, Cal, you have something that something powerful that you know. Well, I said as a trader for 20 years, I roughly know where could be the important support and resistance level as well. And of course, that for in this case, I managed to be pretty spot on this. So a friend of mine was saying that, Kel, this is really crazy. So what do you think for today? I tell them say that the number will stay fixed. So everybody now take note of that. Dow has an has a powerful support level at 31,780. Okay. So as long as Dow Jones stays above 31,780, right, that's going to be difficult for the Dow to come down. In fact, it's all right. Most likely the Dow may even be going up again. Okay, so take note of that, 31,780. Okay, so that was the one part of it. So I was pretty spot on this Dow call. Then after that, on my second part of my message, right, I actually wrote there that gold likely to test 680 in the near term. All right. Now, yesterday during the MAO session, it's all right. I was telling you guys that the gold will likely be going to test 1669 because that's a BMB level. But I did tell you that, right, maybe before 1669, we're going to see 1680. And also, I also mentioned that Bitcoin, in my opinion, has peaked at 24,000. And most likely, we can see again at 18,000 by end of August. Now, when I wrote this statement, it's all right. A lot of people, actually the Bitcoin fans, wasn't very happy about it. In fact, they said that, Kel, are you crazy? The whole world now buying Bitcoin again. I said, I understand. Now, I repeat myself many times before. I've given enough forecasts over the years. All right, some are correct, some are incorrect. Okay, so no one's going to be perfectly correct every time. Okay, I have my mistake, I have my wrong. But since I dare to share this with you, I'm just informing you on my view. Okay, end of the day, how you decide how you make money from it or how you're going to benefit from it, I leave it to you. Now, some people even jokingly say that when Kel says buy, you just sell. Kel says sell, you just buy. Yeah, like I say, as long as you make money, I'm fine. No one is going to be, the perfect one here. Okay, I'm not a God. All right. So what happened yesterday? Look at the gold price. Oh my goodness, the gold was trading at about 1698 yesterday, right? Where the market was trading in the morning, was 1698 around there. And then after that, what happened? The gold just come down all the way, and probably it's about 5 p.m. gold hits 1681 range. Okay. 1681. Now my target was 1680. So I missed by $1. I missed by $1. Okay, $1. I missed the $1 mark. Okay, and after that, the gold just shoot up all the way itself to hit a high of 1718 at one stage. Oh my God. So guys, don't you find this is really amazing? That a person can give you like this and the market almost giving him the target. Yes, I was having a buy order to buy gold at 1680, and if gold would come to 1680, I sure will buy some gold. But of course, the market just missed it by $1, and by the time I reacted, it's already 1690, stuff. I don't feel like chasing, but pretty decent, yeah. I think that for this is all right, pretty spot on. Yeah, thank you, Susan, once again for giving a spot on call. So guys, if you don't mind, can you just put it spot on for me? Yeah, on my view, so that you can see that, hey, this guy really not too bad. Yeah, whatever he feels and he writes, and actually he is. Okay, so this was the gold price. Now, how about Bitcoin? Let's take a look on Bitcoin. Now, this is Bitcoin. Now, I gave my view on Bitcoin already on my TWB Facebook group, on my own personal group. I also on Facebook, I already tell that. Now, I believe that Facebook at 24,000 is already at a very pretty high level, as you can see, 24,000. So I said that, right, Bitcoin will be going down. And truth be told, after that, after I posted that, Bitcoin really came down all the way to the low of 22,300 series. Oh my God, okay. Then of course, as usual, a good rebound came in, but this rebound only hit 23,300s. So which means that, right, if the market starts to go back down again, there's a very good chance that the Bitcoin can come back down to 22,300 again, okay? So this is my Bitcoin view. As long as Bitcoin stays below 24,000, I think I will be correct. So once again, all this information shows that, right, trading is not too difficult. As long as you can make money, as long as you know what you're doing, you can make some money out of it, okay? All right, so that was me, a pretty decent chartist. All right, now yesterday I talked about VIX, right? I talked about VIX, and I say that VIX is actually a very good buy right now. So once again, when I say something like this, it's all right. People are like, okay, but the thing is that I thought that VIX is, it's not meant for buying, it's meant for hedging and stuff. I say, yeah, but if let's say for VIX to go up, right, I mean the stock market must come down. So yesterday I told you, right, you don't buy VIX, you can buy at 22 to 24. This is a very good range to buy this round. Now, this is just based on per round, yeah, not every time. So maybe this round now, we are suitable to buy between 22 to 24. And of course, I offer you my reason why I think that the market has temporarily bottomed out and 22 to 24 will be a very decent good buy. Okay, a decent good buy, right? So what happened? Let's take a look. All right, I told you time to go heavy on VIX. And of course, yesterday, the VIX really came down and touched my technical line very nicely. And now it's at 23. So that means that this VIX now is at between 22 to 24, the level I mentioned. So this is the time to buy, okay? Right, you can consider, you can think about this, and I'll leave you to decide. In my opinion, it's all right. This price is worthy to buy, and you can buy it to keep. So of course, how high can this go? As I said, my first rebound here is 34. Okay, now 34 is the near term. The further away is 42, but I don't think we can hit 42 this round. So I'm more than comfortable and happy to make at 34. So the buy at 24, the buy at 34 is 10 points. 10 points is $1,000 if you trade one contract on it. Okay, so this one I let you decide. Okay, you make your own final decision. Yeah, this one take your own what you call manager and stuff like that. Okay. Now this is the chart that I told you today that I will share with you regarding with conventional. Now this is the S&P 500 chart since January until now. Okay, now I want to take a look here as well, right? This one is the RSI indicator with a parameter of 14. Now we all know that if the RSI is above 70, usually it's considered as overbought. So if it's overbought, then traders, we do expect the market to do some profit taking. So from the look at it right now, right, if you see this, okay, that was where the market peaked. This is where the market in a way peaked. This is the way that the market peaked. Okay, so what I did was a very simple maneuver whereby when only if the RSI goes above 70, then only when it pulls back below 70, then I draw the so-called vertical eye up, and that is usually the turning point of the market. So same thing again, can you see that? Yeah, okay, you can see once it goes below the 70, that is where the particular point comes in, and it's the same thing again. So over here, as of today, with the RSI haven't come down yet, haven't. So because it haven't come down yet, right, it seems that there could be a little bit more upside to go, So traders, take note of that. Okay, so that is the RSI portion versus the stock market. Okay, and there's one more thing that this is called the sorry, my bad, sorry. The one on top, sorry, my bad, ayo. Sorry. The one on top of it itself is a Williams percentage indicator. Sorry, my bad. Yeah, the one is a Williams percentage indicator. One that is, that's why it stay on the 70 so long. Okay, right, the Williams percentage indicator. Sorry, my bad. Okay, the one at the bottom is RSI, which actually tells you the RSI at 70 is always a time to sell, right? But of course, you can see there was no range recently. The RSI hit 70, so you can find a common point instead. So where's common point then? Let's take a look at common point right now. Now the common point should be here. Can you see that? Can you draw it correctly? Yeah, is it straight? Let me just draw this again. Yeah, not very straight. Maybe a parallax error now because my screen is slanting towards my side. Okay, anyway, something around there, and let's take a look right now, everybody. You notice that it's the same thing as well, right? When RSI hit the common point, that is a point of telling you to be careful and expect things to change a little bit, or you need to be about cautionary. You can see that this is where it is. All right. So there was 3 situations that it happens, which is here, and now. Okay. So now with these 3 charts, with these 2 indicators and all the boxes I'm drawing, right? Let me ask you a very important question. Okay. Remember, when before the market peaked in December 2021, all right, what was your feeling back then when the market was moving up every day? All right. And do you notice that during the top itself, right, you see a couple of dojis? Can you see that? Okay. So now we move fast forward the tape to March, right? When the market was recovering so strongly, it was down quite a fair bit, right? S&P 500 was down quite a fair bit. Then after that, in March, the market rebounded and every day go up. And the thing is that every day go up, right? And a lot of people are saying that, look, see, you have your black candle here, which is supposed to go down, right? But the next day, the market have a white candle and the market continued to go higher. So what happened recently was the same thing. The black candle came in, but the white candle was even stronger and the market went up for another 3 days. So the thing is this, the time itself, right? What was your feeling back then? And how were you feeling? Were you feeling bullish like what you're having right now? And thinking the market is going to go back to the new all-time high? And then after that, what happened? The market cascaded downwards all the way for one big sell-off. Now, what I'm trying to explain to you is this. If you have this same feeling right now, you are exactly having the same feeling that happened in March and the same feeling that you have in December 2021. Okay, but the indicators don't lie. You can see that there are common points already in the market. So in short itself, right, in my opinion, we are going to see a bit of sideways movement right now, because every time before the market starts to really come down, you notice that there'll be some little bit of sideways movement first. And then after that, the sideways movement completes, then there is a potential of some selling to come in. Do you understand my point? Now, how many of you like this chart itself? You like this chart, put with LIKE right now, okay? How many of you like this chart? There's 84 of you online right now. Do you like this chart? Now, this is using very common indicators. The first one on top, the first indicator called the Williams indicator. This is from Larry Williams. I like it very much and I use it quite often. But of course, the only thing is this, you can stay at a high level quite some time. So you need to actually know how to use it to your advantage yourself, okay? Then, of course, RSI is a common thingy, but RSI, it doesn't repeat, right? So you need to find the common points, and that's why I teach people common points in PTP. And of course, if you actually combine them together, you can roughly know where could the market be heading. So, of course, this is one side of it. I'm going to do more updating in a very short moment now. Quickly take a look, take a picture if you like it. Thank you very much for those who like it. Thank you, Susan, Janet, Alex, Jerry, all right, Chinqui, Eugenio, okay, and this is Anthony, Brian, Sherwin. All right, thank you very much. Okay, all right, give me all the love and like if you can. Okay, give me all the love and like, all the emoticons, that'd be cool. Okay, so this one is just part one. I'm gonna take this away right now. Okay, let's go for part two. Okay, part two. Now, part two itself, right, is a little bit more like this. Okay. Again, we had the common points, okay, the common points, all right, common points from the RSI. Okay, so same drawing. And common point of RSI, meaning that we need to get the area in. It's here, here, and here, okay. So we're going to categorize them right now. This is all the way up, all the way up, and all the way up. Okay, so this is point A. This is B, and this is C. Can you take a look? Okay. So if we actually take a look at right now from the chart, right, we can see very clearly B is lower than A, despite we have the same common point. Then B to C, we have the same common point, but B to C is lower. Can you see that right now? So in short itself, right, it's actually still telling me that the downward trend is still ongoing. The downward trend, in my opinion, is still ongoing. All right. Nothing has really changed at the moment right now. But of course, could this be a bottoming signal? It is possible, because we can see that there were two signs that is possible. There was doji and support level over this area. That means that the S&P 500, right, there's a very strong support at 3760. 3760 is a very strong S&P level. Every time the market goes there, right, the market will rebound very strongly. So that actually gives me the very strong verdict that the S&P may still have room to go higher. Because point C is not going to be the end yet. Point C can still stretch a bit more before it actually finish point C. So this is possible that the market may have a bit of room to go. And of course, if you put a trend line downwards right now, right, if you draw a trend line, logically speaking, if you really have a point C that is still applicable, the market still got a lot of room to go back to 4,300 level before we can actually have a point C. So again, That's the reason why the upside potential is still there itself. The upside potential can be all the way up to 4,300 level, where the current price right now is at 39.81 level. Okay, but now the thing is this: the upside is very confirmed in terms of if it goes up 4,300, it is possible. But if the market really goes down, right, I want to show something very critical right now. This is the part. This is the second part here. Okay, regarding and show you the potential upside and downside of the market. Okay, is that okay? Wow, Sharif, give me a very cool number, 4396.5. Wow, okay. All right, so the next thing is that you can take a look right now on the other side, is that the low is actually getting lower. As you can see, this is the peak, right? These are all the peak level. So the low actually went down. So this is the low, 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 low. So if let's say the market really dives down, then this low will be somewhere around here. It will come and be around here. That means that this low will have to be lower than 36.49 level. So based on the thing here itself, right, you can see usually it will be down by at least 2 boxes, 1, 2 boxes, right? Go down itself, it's about 2 boxes. Okay, so 1 box, as you can see right now from here to here, in a very simple, easy way to understand this. 1 box itself, right, the difference is about 3981. All right, 3981 minus 3873 is about 114. Okay, so let's say now the low recently is 36.49. Now, if the market is to go down by 2 boxes, so it will be minus 114 multiplied by 2. So what do we get? So what we get is this 36.49, right? So 36.49 minus 114 minus 114. We'll get a number, and that number itself is 3421. Which is actually a number that a lot of brokers are also using 3,400 as a form of a support. This is very interesting. Okay, so that means that the upside itself, right? Okay, I'm gonna use Sharif's number at 43, right? 43.96, also higher. Okay, right. So the upside from here itself, right, can be as high as 43.96, but the downside can be as low as 43.21. Okay, so we have 2 numbers right here right now, just for the fun of it, right? Everybody now, there are how many of you? There are more than 80 of you right now. Choose between these 2 numbers. How many of you believe that you're going to see 43.96? Okay, 43.96. All right, how many of you are going to see you're going to be 34.21? So 43.96 or 3421. Please choose a number right now. 43.96 or 3421. Please choose. Okay, right. So what do y'all think? Now I say again, there's no right, no wrong. Everybody's entitled to their own views. Don't fight over it yourself. All right, so 4396 is actually the technical level that the market can go, because it can go all the way there. Okay, now this number itself, right? I don't know how Sharif get it, but yeah, it's something like this. If you draw that way, maybe like that. Yeah, let me just draw it properly for him to be fair. Something like this. Yeah. Okay, but somewhere around there. Yeah. Okay, so this is the view right now. Okay. All right, so we have wow, so many of you taking the 3421. Interesting. Okay, most of you took 3421. Oh, okay. Why 40 number? Oops. Oh my gosh, what happened? Okay, most of you took 3421. There's some background voice on. Okay, all right, most of you take 3421. Joseph actually says that this could be actually going back to this 4396. Yeah, like I say, everybody is entitled to their own view. Okay, no right, no wrong. We're just having a little fun here itself. Okay, all right. So Fred says more like 3870, 3870. Okay, like a reverse, inverse head and shoulder pattern. Yeah. Okay. Everybody is entitled to their own view. Okay. No right, no wrong here. So yeah, the shoulder. Yeah. Okay. All right. So you can see that everybody got their own view. You make your own view. I have my own view too. Okay. For me, it's all right as long as there's no much change in the terms of the fundamental. I still think that 34.21 is my peak. 34.21 is still my peak. And I say again, I don't think the bear market is over, but I think that we still got a bit of room to go. So let's talk about the bear market, right? Let's take a quick one on this bear market itself, right? Just hold on a minute. Sorry, not updated. Okay, so we can see right now the situation in the market right now. We had the initial jobless claim that came out 251,000. Wow, this is higher than expected. But look carefully, this is the number. Look at this. The initial jobless claims are showing that, and the market likes it. You know why? Despite, that means they're telling you because there's more people getting jobless, that means the economy is not really that driven. Hence, therefore, inflation will come down. So whichever they are doing right now by increasing interest rate really brought people back down with no jobs. Okay, it's like, okay, just because of inflation, you want me to have no job. Then how am I going to survive? What, on pension or some grant? So anyway, this is the whole thing. The market just want people to be jobless, or at least the activity to be going down so that inflation can stay down. But if that happened, right, the economy will suffer, right? Isn't that true? Now, the Philadelphia Federal Manufacturing went down. Wow. It did not go down by 1% or 2%. It went down by 10 notches. The forecast was minus 2.5. But yet the number came out 12.3. Oh my goodness. This is in a normal market where I've cracked the market long time ago. But what happened? The plunge protection team come in and saved the day again. So you can see now the Philadelphia Federal Reserve manufacturing data has went below the zero mark. And that is terrible. Now, one thing to take note of this is that let's just bring back now and ask you a question regarding this situation. I'll give you a moment. Now let's take a look at the economic data again on the market. All right, this is going to be next week data. Let's check this week data first. Okay. Okay, let's look at the Philadelphia Fed Manufacturing Index first. Yeah, I want to take a look here right now, everybody. Now, of course, I said today's sharing on MAO will be a little bit heavy on economics. So, of course, some of you may like it, some of you may not like it. All right, the charting will come later. Yeah. Okay, let me update a little bit. Getting a bit slow right now. Okay, guys, take a look on the chart. Right, this is the Philadelphia Federal Reserve Manufacturing Index. Okay, and obviously, you can see very clearly the last time where we have negative numbers, that was in 2020. And the time itself, that was the start of the pandemic. Now, of course, it went down really crazy because the whole world got into standstill, we understand. But why are we having this right now? We don't understand. Because it's inflation, obviously, all right? So you must understand that this is going back to 2020 level, okay? But of course, the pandemic, how to compare, right? Okay, let's go a bit more then. The maximum. Okay, so you can see the last time when this happened before the pandemic, it will happen in 2008. That was during the Lehman crisis. And then after that, when it happened itself was in year 2000, that was we have the NASDAQ crisis. Then after that, subsequently, we had a smaller one. The bigger one again was back in 1987 when the Wall Street crashed. So you can see that every time when the Philadelphia in this index is actually going downwards, the whole global economy is not doing well. But why is US Federal Reserve is so confident? Because they're going to likely get to print more money into the system. All right. So that is why I'm saying to you that this is no joke at all. And of course, how about the initial claim itself? Let's take a look over here. All right. Now, of course, okay, there is let me just bring it up for you. There are some people saying that, right? But isn't that what Federal Reserve want, is to have people not going for jobs? So that will cool down the economy, right? Yes, indeed, that will cool down the economy, but there will be repercussion. Okay, let's take a look right now. Now, this is the initial jobless claim number. It shouldn't be high at all. So let's take a look. Can you see that? Okay, the numbers are now seemingly increasing. And this is naturally never good. Okay, so it's increasing, and this is actually telling you that people are getting jobless. So it means there'll be more stress to the society and economy, and traders need to be careful on that itself. Now, next week is going to be a blockbuster week. Next week is going to be very, very big. Yeah. First of all, you have the consumer confidence, which the number is expected to be slightly lower. I don't think so. I think it'll be much lower than 98.5. Okay, new home sales is expected to be lower. Already, again, another problem. Durable goods order is expected to be lower. And of course, pending home sales is expected to be lower. And of course, we have the FOMC meeting minutes, whereby FOMC going to do the 75 basis point on the Thursday, 28th of Singapore time. And of course, at 2 a.m. is where the FOMC meeting statement come out, and the press conference at about 2:30. And again, all right, the GDP numbers is expecting to contract. Now, if the number contract in a worse than 0.9, we have a great headache here itself, okay? All right, so this is all telling me that next week is going to be very difficult for the bull market, unless a few things here that, you expect the bad data to come out, but the market don't react. That's a very bullish market, right? At the moment, it seems to be happening like that right now. But if you remember back the time I showed you to you, right, the time when the market was moving upwards, right, when the indicator are going downwards, right, it also happened during the same period of time. And of course, the feeling is almost exactly the same. All right, so you can see very mechanical. Once again, the US Dow Jones, first of all, go into reality. Then again, as shown at about 10:30 hours, someone came in very strongly and support all the way. Then usually after 2 a.m., that's whereby whoever's around support everyone one more time. And again, this is what happened to the Dow Jones last night. Okay, very mechanical, very easy, not difficult to trade at all. Right, so one thing is that why Tesla is in the picture again, because Tesla, Elon Musk said that, right, he's very confident that there will be better production of cars. Okay, recently I see more and more Tesla in the road. And Elon Musk believes that there's still a lot of room to go, and AI will be next one here. So of course, we know that Tesla jumped on the earning beats, all right? A lot of people be calling to buy, and the volume actually shows up. And of course, despite the current supply chain issue, and here Tesla can go higher. So the question is this: if the supply chain issue is no longer a problem, can this Tesla goes even higher? And it's actually very, very, very possible. So that's the reason why a lot of people now are revising Tesla earnings upgrade. They say that Tesla can go back to $1,000 again. But interestingly, Cathy Wood have been very quiet on Tesla, so we'll see how it goes. All right, but the thing is this: he says that Jim Cramer says that on CNBC that Elon Musk is unsealable, which means that, right, this guy cannot be taken out. This guy is damn good. So again, all these things tells you that the market current situation now is very bullish right now. So that's the reason why Nasdaq actually up by 1% in the third straight positive session as Tesla share pops. All right, pop means go up, yeah. Okay, so it went up again, and of course the US dollar, I was wrong. I thought US dollar would go higher, so I get it wrong. Okay, get it wrong. But the thing is this: we can see that the Nasdaq up by almost 5% this week alone, and there's a lot of potential. Now, 2 days ago, everybody's just worried. Now, because market go up, right, everybody sees got potential already, as usual. So what he sees right now, right, the Philadelphia is like 1.6 times worse than the Dow Jones, and initial job claim was not fantastic. So all these things tells you that, right, the situation now is not good, but the stock market don't care, they don't bother, they want to buy, and if you are, just buy and enjoy. Okay, so that is what is happening right now. So let's look at some local and global news and see what can we learn from the market before we look at the chart, alternate market news. Yeah, quick one. Okay, first of all, US President Biden tests positive for COVID-19. Oh my goodness. All right, although he's experiencing a very mild symptom, right, but we actually know that. How many of you that way? How many of you felt that after you got COVID-19 or you took the vaccination jab, right, you felt that, right? Your memory is not as good as before. How many of you felt that? Okay, that means that after you have your COVID, I mean, you suffer from COVID and you recover from there, or when you are actually having the jabs and then even the COVID comes in, the post-COVID, you feel that the memory power itself is no longer there. Now, for me, I feel that way. My wife also felt that way. My wife is very good with memory power, but she also felt that way. So just thinking out loud itself, right? We all know that this Joe Biden has this little thing on stage whereby you sometimes forget what you want to say. And because you forget what to say itself, right? That was before COVID. So now with COVID, right? Just wondering what will happen next. It could be a very interesting smile, right? When he actually makes some errors and stuff. So of course, is that basically really telling me that, right? People believe that what some of the guys say that Biden will, because of this health issue, he cannot continue his term. All right. So this is going to be very, very interesting. Okay. So Sharif say he also had this feeling about the memory loss. Then Joseph say his respiratory system also not very good. All right. Eugene just laugh over it. Okay, let's continue. Now, inflation in Sri Lanka will hit 70%. Oh my goodness, 70%. So it's like, go for regular Coca-Cola itself as $1 now it's at $1.70 at the same place. Oh my goodness, this is really nuts. Okay, jobless claim, as we know, the numbers are very bad, but then again, the market buys up. So once again, thank you guys. This is really nuts. Europe Central Bank surprised everybody with a larger than expected rate hike, right? So they are looking at 25 basis point at best, but they came up with a big one itself, okay, a 50 basis point. And they do it itself is from zero deposit to they bring in deposit because they need to increase the rates, all right? So all these information is moving, and of course, regional countries will also follow very, very soon. Okay, and of course, on my site here itself, right, you can see that again, consumers are showing that they are shelling out more than an average of $10,000 more for used cars. I mean, last time not so expensive, right? Now they're buying more. So all these are telling you that it's going to hit everybody, not only in Asia, but in whole part of the world. And of course, Coinbase manager and two others are charged with crypto insider trading. It's like never ending like this Coinbase thingy itself. That's why some people get out of Coinbase, right? Now, ADB is an Asia Development Bank, has cut China forecast because they feel that they cannot handle this so-called zero. They're trying to do the zero COVID approach, right? But we know that it's a bit of concern. And because of that, right now, right, it actually impacted the property market, and this is going to continue even worse. And of course, UK is sending more weapons to Ukraine, and more than 9.5 million Ukrainians have left. Okay, and again, why is that so? Because the bombardment itself is continuing, and it shows that there's no chance that Ukraine can win this war. Goldman Sachs says that the bear market is not over yet. So how do we believe this? Now, Goldman Sachs has a very good way to say this, but don't do that, right? So later on, I'll show you my view, but you can read out on CNBC about what she has to offer. And of course, same thing again, it happened in this snap whereby I'm there. And then same thing again, we were doing some, this snap itself, right, has really came down by 25% because of the slow hiring and stuff. And last but not least itself, right, Art Kashin says that the market can continue to go up because market earnings has topped expectation. So this guy, this is not this guy here. So there's this picture. He's quite decently accurate, but he's always more on the bull side, yeah. And last but not least, okay, some of them are still saying that this is going to be a bear market. Okay, I'll leave it there. All right, so that is the global news right now. Hopefully you enjoyed that segment. Once again, is all these important news is just give you a quick heads up. Let's look at some important alternate market news before we go to the charts and see what do we have right now. Okay, so earlier itself at about nearly about 70 people, I asked you guys whether you're bullish or bearish. Majority were actually bullish, okay, majority. All right, so that's going to be interesting. Let's look at the market right now. Now, one thing is that you must understand the weightage of the component in the S&P 500 and NASDAQ. Apple is the biggest one. The weightage itself, right, is at 7%. All right, this 7, the weight is 7. Okay, so obviously at 7, the weight of 7, right, it's very easy for it to be used to manipulate. So if you think back again, right, when Apple just get pumped up, right, almost 100% everything will just go up at the same time. Then of course we have Microsoft, Amazon, Alphabet, Tesla. All right, these few. So all these few are the FANGs and close friends right now. So of course, when the technology shares are all moving or pushing up itself, right, it's no brainer that you know that who's being pushed up. For the Nasdaq itself, right, Apple is still the one leading and it's the 13. So Apple is the king stock. Can you see that? Apple is the king stock here itself. All right, and Microsoft is actually just closely behind it. So if Amazon to Tesla is slightly higher, Alphabet is there. My goodness, guys. So imagine now, as long as the FANGs counters are moving, you should know you're pretty difficult to hold a short side. So their weightage is so heavy. Look at it. Look at Apple alone itself, the two companies, right? The weightage itself easily itself is a very heavy thingy. Then of course at this junction here, you may ask, then how about the Dow Jones, right? Let me show you Dow Jones right now. Dow Jones instead is not Apple, it's actually Goldman Sachs. So recently when Goldman Sachs actually have a better than expected earnings, right? Yes, indeed, the share price shoot up, but I also tell you, right, the test is not real, so it doesn't matter. So Goldman Sachs weightage itself is actually here right now. So as long as this was 6.6, so as long as the market, okay, as long as the market want to push anything, right, just push all the main counters, right, you will see the market going up. So the day they push Goldman Sachs, the previous day they push Apple. So of course, as long as these two prices are going up, right, it cannot be down. It can't. So watch Goldman Sachs, watch this Apple will be a better choice. So let's look at this two counter instead right now. We have to make a quick one on this. Okay, let's look at Apple right now. Now that back then when Apple was coming down, I told you that Apple when buy can buy at 129, and Apple really hit 129, and the volume was there. I told you before, the volume was good, the share price was nice. It's a buy. Remember? Okay, so you cannot remember, it's okay. Now I'm going to tell you this. After that, I give you a few technical points, and the market really followed through. So today I'm going to redraw all my technical points because the market has recovered, right? Okay, so let's just redraw this one. Now I believe that there will be some resistance soon on Apple. It will be somewhere around here now. This should be the resistance. All right, which the market now has crossed over it, doesn't matter. And the support here will be somewhere around here. Okay. So I'm going to say this upfront. This is what I feel the market could happen. Now, Apple will have a strong support at 154 right now because now the current price is 155. Okay. Now, if Apple loses 154, Apple will come back down to 146. Now, if Apple can stay above 146, all is good. But if Apple loses 146 or something happens between, there is a chance that Apple share can come down all the way to 120. Okay, so now this is what I feel that what Apple will do in the near term. And on the other side itself, right? Okay, is that if Apple continue to go higher, how high can Apple go? And the number I give is 164. Okay. So this is my view on Apple. Downside can be as down as can go down to 128. The upside can be as low, can be as high as 164. Okay. So traders, this one you go and think about it. I hope that you can make some money off this Apple. Okay. Apple is a kingpin stock. If you can make money out of it, that will be fantastic for you. Okay, kingpin stock. Yes, I'm going to take a picture of this. Okay, this is Apple. The next counter that I want to show to you just now, I told you, right, is actually this Goldman Sachs. Now, Goldman Sachs, as you can see, right, the volume came in strongly on this day. That means this buying is kind of genuine. Now, where's the so-called resistance? Now, there's strong resistance somewhere around here already at about 330 level. The next support that we have can be as low as here. Okay, so I'm going to give you my resistance. What 329 would be the resistance, all right, which I think the government side will touch. But after that, something happened at home. It may go back down again, and this time now it will be 295. Okay, so how you see this? If you think that this is fine, then there's no problem. We can just move on. But if you think that this is not good, then of course we'll see what can we do best for this right now. But this is for Goldman Sachs. Okay. Okay, all right. So that is the two things that I want to show to you through here itself. Let's look at the furthermore. Now let's take a look at this one here. This is stock allocation versus consumer confidence. This is very scary, yeah. Now, stock allocation means that the stocks are being placed in the number that's in the market, right? So you can see that usually if the sentiment is bullish since 1995 all the way, then the stock allocation is in tandem. So obviously, if the sentiment or the feeling is not good anymore, then of course the allocation will be downwards. That means there will be some selling. So here we will have a problem, guys. We have the sentiment is at the lowest and the allocated amount is actually so high. So what will happen if, let's say, this the positive side? If the market, the sentiment recovers, okay, and recovers, then of course the likelihood this one will have to go higher, right? That means that stocks will get more expensive. So to buy now makes a lot of sense. That is if, let's say, here is warm water. But imagine now if this is actually hot water, then there'll be different thing altogether. All right, but the point is this. What I'm trying to explain to you now is that the confidence level is not at a very low level, and the allocation is just only dipping a little bit. All right, so we had this before last time, like this. And after that, what happened? The stock market came down very fast to meet up with the sentiment. That is the one that I'm quite worried. Right, this is the reason why I say there is a potential, a jump down, if let's say the market really is to sell, okay? Still now at the moment, seemingly okay. Now, remember I told you about this S&P 500 before the FOMC meeting. So this one, you just be very, very careful. And you study the chart again, you just see that it has a bit of repercussion, yeah? Okay, right. Then of course, I show you this chart, this channel, this beautiful channel I showed you 2 days ago. I say that this channel is almost there. Once it reaches the channel peak, right, we can consider to do a bit of short selling in the market. So that was what I said to all of you. And the crazy part is this: as of this morning, the market, the what do you call there's a new level, a new owner, not owner, a new thing was there, and of course the market beautifully stopped at the BMB level. Okay. All right, so once again, it shows that drawing the right technical point can give you a view as long as it's actually meant to be. Okay, so now this is the latest. As you can see now, the market has really touched the green line. Previously didn't touch, now it touched already. So that's why I think that we are market ripe, RIPE, for it to sell down. Okay, the market is ripe. Okay. It's time to look at it, okay? And of course, if it really follow the thing I told you, right? Then of course we can see the market ding dong. There might be a push, then after they come down again, right? Something like this. Okay, all right. So traders take note of that. Now this is the consumer survey, confidence board versus the Michigan survey. And you can see again very, very clearly there is a very big difference now between the consumer survey and the the Michigan result. So it's very, very far away. And because of that, right, that gave us a feel that, you know, things are not going to be fine. And of course, this is the inflation. The inflation is the one in blue. This is the inflation data that's surging like crazy. And of course, the unemployment rate is at low end itself. So we backtest this for the last 10 years, whenever that you see this happening where when this is actually happening, you can see that, right, the sentiment actually is also not so good. It's also usually coming down. But this time around, we have the inflation that's surging up fast, but then the unemployment going down. So this actually is something that we don't see quite often, or if not have really happened. So what will happen next? Most likely that if you really get the best deal, you need to actually bring down inflation, but it's going to be tough, right? So that is a problem right now for the regional market, and everybody's kind of confused to be buyer or be seller because both sides also seem to be correct. But of course, if you put the Federal Reserve Fed fund rate together, things will get a bit clearer. So you still have the same data earlier, but we put Fed fund rate. So as Fed fund rate goes up, right, what would you see? You will still see inflation going up. But of course, then what happened on the side note, your unemployment will to really hit the wall. Okay, so this is something that you must take note of that because this is the very big gap right now between the Fed fund versus the expectation, because this actually tells you that there is a reason why both of you guys are all stretched within a bull and a bear, because the market is also kind of confused right now, or they're preparing for something big to later happen. Yeah. So that is the alternate market news for you guys to inform you that there is reason for us to think that, right, why you guys are suffering in terms of trading, you're not able to get the right direction. It's because the market is also kind of split up, and it's not usual for the last 40 years. Okay. All right, let's look at the chart right now before we end off today's MAO. I thank you very much once again for staying with us all the way. Let's go. Now let's look at the chart right now. First of all, use a conventional first. China. Now, China stock market initially went up. I told you there's a 14,108 resistance level, right? The market really did it, okay? The market strength up all the way up to 14,108. And then after that, it was very near to break the moving average, very near. And my friend, people are telling me, okay, market is going to go up. But when you can see very clearly, it got rejected, right, by the trend line. And now it's staying down below 14,108. That means there's a very good chance that it's going to go back down to 13,490. Okay, that means that if the market stays down, there is a chance for the Shanghai A50 to go back down to 13,490 level. Okay, so there's something to take note for China A50 counter. Okay, now let me just take a quick picture on this. Okay, then after that, let's look at with my indicator right now, step by step. Dow Jones first. Now the Dow Jones have a new BMB yesterday. This is a new BMB, and this is my TWB system, right? Now BMB, this is a new BMB, so a new target for us right now, 32,584. That means that if the market actually steps above it, okay, what's the level to be above it? Yesterday's high is 32,058. 32,058. Okay. So simply put, if the Dow Jones can cross 32,058, it will march towards the first pivot point, and that's 32,305. And if the market can go above 32,305, the market can go all the way up to 32,584. Okay, this is something on the upside. Now the downside, take note now, is MLP. The MLP is 31,922. As long as the market stays above OP and above MLP, today is still a buy. But if the market stays below OP and drops below MLP, it will be a sell. But because the KSI is green in color, the downside will be kind of limited. Okay, so let's just focus here. If the market can go below MLP, I think at best you'll see pivot 1, pivot 2 lah, and that's 31,772. Okay, so watch out for that. Okay, so that is my view at the moment right now in terms of numbers. Let's look at the next thing which you have will be NASDAQ. Now NASDAQ has blossomed all the way. It crossed the BMB 1x1 and continue much higher. Now for NASDAQ today, 12,482 is the MLP level. Reaching below MLP will be a sell, but the KSI inform us is a buying, and the MA30 is below us. So overall, NASDAQ is above, is a buying condition as long as stay above OP. Now, but today's OP is 12,535. This is the OP for today, and currently now it's actually trading at 12,516. So which means that as long as the market stays below OP, you cannot activate the MLP for trading. So you cannot look for buy at the moment right now until it goes above it, okay? Until it goes above it. Okay. Okay, so watch out for 12,482 today. The Nasdaq must hold above 12,482. Then the market can recover. If it breaks below the 12,482, there will be some selling coming in. Okay, there will be some selling coming in, some profit taking ahead of the U.S. Federal Reserve meeting. Now I say once again, the VIX is already now very nicely planted at the trend line. And we're going to have on Thursday the FOMC meeting, and likely it's going to be a 75 basis point. Based on the past experience and cyclical pattern, there will be some profit taking ahead. Because now the question is this: we all know that there will be a 75 basis point. The only thing is that what is going to happen next is that would there be another 75 basis point? It's a question mark. Number two, what will Federal Reserve say regarding about the current situation right now? And of course, with the economic figures not doing well, are they going to lower down the stop down to reduce their interest rate hiking, or they're going to press pedal to the metal and continue to drive it in? So I believe that they are likely going to drive it in. So that's the reason why I think that you should be taking profit. Okay, right. Let's going to write it down for you. Make it easier for everybody here itself. All right. Time to book profits on the long side, especially Nasdaq. Counters ahead of the FOMC. Okay, all right. At least you get to see this from me itself, tell you that what to do and what you can consider to do, and as a trader, you can try it out. Okay. Okay. Yeah. Okay. Next one is S&P 500. Now S&P 500. I want to shift a focus first for time being. Let me just shift a focus first. Okay. S&P 500. Just give me a moment. Okay. Now S&P 500. Now am I speaking now? There's some profit taking already on the US futures at the moment. As I'm speaking right now, there's some profit taking at the moment right now. Just give me a minute. Okay, let's take a look at now. Look at this. Okay, everybody take a look. Okay, so let's look at S&P 500 on the 5% rule, the one that I mentioned. I'll share about it today. Yeah. So this is the 100% mark itself on the S&P 500. As you can see, about 48.27 marker. All right, right here. Okay, I think you can see the numbers on the right side. Okay, never mind, because it's blocked by my picture. Okay, so I can write down 48.27 right here. Okay. So what happened is this: as you can see right now, the first wave where the market was coming down, the very, very first wave, the market came down and then hit 95, rebounded, right? And then after that, go all the way down, hit 90, rebounded back to 95. And after that, 95 went down to 90, broke below, missed 85 by a bit, rebounded, stress up, went all the way back to 95. And from 95, when it collided down, all the way hit 85, and rebounded, and then all the way down to about 80, rebounded, and then try again, broke 80, went down all the way below that, rebounded. Okay. Okay, so you can see that this is the thing here right now, right? Okay, now take a look here. If I'm going to draw one more line across it like this, okay, can you see right now? Okay, this is a very way of a technical trader who have experience telling you what is happening. So you can see that now this is the diamond area whereby you can see the market crosses. Okay, can you see right now? Okay. So what I'm trying to say is this, that now we are at a very interesting position whereby the market can do this. The market can continue to go higher back to here itself, and that will give me about 4090 mark, because the market has supported itself at the 80% mark. But at the same time, at the very same time, if the market actually goes back below the trend line that I have, then we can actually see going back down to here itself, the 80% mark, and that's 38.57. Okay, so currently now we are at 39.82, right? Okay, I think the nearer closer to it itself, right? The upside should be around here, 40.90, or the downside can be 38.57. I think that this is something a little bit closer to the heart, a little bit closer to what I say reality. So for trading itself, right, for traders, these are the numbers that I'm actually watching closer. So take a look at this, take a picture of this. I think that this is the two ranges that I think the market could be going. And as long as you follow through, you should be able to get the range of the market for this week, this coming next week itself. Okay, yeah. Okay, all right. So now you get an idea. Now let's go back to the my TWB charting. Okay, so for my TWB charting now, you can see that as long as the market stays above MLP today at 39.70, the market is still kind of bullish. 39.75 is a pivot 2 level. So as I say once again, as long as the market can stay above 39.75 or 39.70, it's all okay. Upside potential or S&P 500 can go back to 40.24 based on the KCB. But if it loses these two, then oh, so sorry, there is a chance that the market can see this number at 38.62. But the KSI at the moment now is pretty green. So for the downside itself, right, it's going to be difficult. Yeah, the downside, I believe, is going to be difficult. And we can see very clearly every time when the market goes down, right, there's seemingly some artificial strength that will come in to buy up the market at a very fast speed itself. So it seems that some artificial robot is actually moving in the market, trying its best to artificially hold up the market. You can actually feel it very closely if you watch the market closely in the market. Yeah. Okay. All right. So that is the S&P 500 right now for us. Now Hang Seng, as I told you, for Hang Seng is still a pretty downside market. Hang Seng today is a DJDD, so which means that the market is going to follow the OP very closely. So today's Hang Seng itself now trading below opening price, so that means the downside is there. KSI is red, means the selling pressure is there. As long as the market stays below MLP 2727, the market should be going down. 2727 should be going down. Now pivot 1 is here, 2604. This is the very strong pivot point. If the market cannot stay above 604, then there will be some selling. Now you can see the market is trying its best to stay above 2604. Downside itself can stretch all the way down to this point, and that's 2280. But as I can't see any fundamental reason to bring it down. But of course, today is a DJDD, it's a possibility, and it's a new BMB right now, right? That means there's a chance that the market may come down to 20,049. Okay, and I think that will be a very good level to be buying from down there if you're looking to buy back your short position. Yeah, that's all for the Hang Seng. Okay, and last but not least, we have DAX coming up for here. Now DAX has been very volatile. It went down yesterday all the way to pivot 2 at 13,152, and after that dramatically recovered because it's above MA30. KSI is green in color. The market will prefer to buy than to sell. But the only thing is that if the market actually closed below MLP, so that means that the selling pressure is already there. So for today, traders, let's take note on the trading side that if the market stays below the MA and MLP, we may see some selling. So let's show you what happened yesterday on the DAX, a quick one. DAX opened up in the morning, showed and break MLP. Once it broke the MLP, it was below OP, below MLP is a sell. The market went all the way down. And then when it hit pivot 2, it stopped there very nicely. And then after that, recovered, came back down again, hit pivot, rebounded, came down again, hit pivot, rebounded. So you can see that the pivot is a very, very powerful level. Okay, very, very powerful level yesterday for the DAX market. All right, let's look at crude oil right now. Crude oil. Now for crude oil, the downside pressure is still right there, but the boys are still picking up the tap. So in short, for today's MLP 97.66 is a very strong level to break. If the market can break 97.66, we're going to see the crude oil price going back up again. I'm still very bullish because you can see now there's a stack here itself on the crude oil. The moving average MA30 and MA200 is almost identical at 130 right now. This is a very strong stack. So if the crude oil price goes up above 97.66 and break 98.12, I'm very confident we will see $100 again. I repeat myself one more time. I'm gonna write down for you. I'm gonna write it down for you. Okay, if crude can break above 98.2 today, we will see 100.3. Okay, you can see that, right? I wrote it there already. That if later on, if this really happened, when the crude oil price breaks above 98.12, that is the pivot 2 level, pivot 1 level, then I'm very confident that we will see $100.30. Okay, very confident, yeah. All right. Gold price right now, gold. Okay, for gold price, as you can see, gold price right now is trading above MLP at 1707. Yesterday, I told you the gold price will come down, right? Now the new BMB formulated, and now we have a new low for BMB potential downside. BMB for downside can be now even lower. Previously it was 1669, now it's 1641. 1641 right now. And this is potentially could be a single yellow if this is continue, right? So KSI is red in color, blue bars are still there itself. So if the gold breaks 1707, I'm confident to say that gold will come down all the way to 1672. 1672 could be next for gold price if the market really breaks below 1707 today. Okay, all right. Next, silver. Now, silver is still on the way downwards. I'm still very confident on silver coming down. Silver 1799 will be the support level for silver. Today, MLP is at 1876. If the market breaks 1876, KSI is red in color, blue bars are almost everywhere. Very good chance that if the market breaks $18.47, silver is going to come down. I'm still bearish on silver. I still think that silver is going to go down to 1799. Okay, I'm still very bearish on silver right now. Very, okay, it was very bearish. Okay, okay, very bearish on silver. Okay, very bearish on silver. All right, so that's last two before we go for Bitcoin and Ethereum. Now, let's look at Ethereum first right now. Ethereum now is doing a bit of side movement now. It's just hanging around my pivot. 1615 to 1459 is actually ding-donging. KSI is already red, but no blue bars, so that's why there will be some sideways movement. MLP is supporting right now at 1553. If the market breaks below MLP, then we can see some selling back to 1459. And 1459 is heavily supported by the MA30. So as long as the market stays below 1459, it's okay. But if the market breaks below 1459, then I think that the market will come down. I think over the weekend, watch this 1291 will be critical. I believe that over the weekend, right, Ethereum has a chance to see 1291. Okay, weekend. Okay, so traders take note of that. Last one but not least is Bitcoin. Now, Bitcoin is now basically trying to it's more like coming off. MLP is 23,230 this morning, already triggered and comes off already, which is very near to the pivot one today. So it's a very good call to sell on the Bitcoin. And I believe Bitcoin will come back down to 21,777. Okay, this number they're watching out. If Bitcoin goes down all the way, there's a chance to see 21,777. The KSI is green, no blue bars. The downside will take some time. It will not be immediate. At the moment now, as long as the market don't have KSI turning red, it's going to be difficult for this market to come down right now. Okay, all right. So that will be all for today. Just a quick one for people who like to see my TWB this version 5.88 to get my view on my Dow and my US market. At the moment now, everything is still okay, still moving upwards for the Dow Jones. KSI has been green all the way, but my KRW is still red. So if any time, if the KSI turn red, then there will be selling. At the moment now, as long as the KSI don't turn red, it's going to be very difficult for the market to come down for the Dow traders. This one, you just have to understand that. And of course, for NASDAQ, it's been very bullish for us. NASDAQ, KSI green, and here no blue bars, right? It's a very bullish sign, and that's why NASDAQ is still on the way. But with the NASDAQ now coming down on its own, and if you break MLP, traders should consider take some profit, yeah? And last but not least, we have the S&P 500 coming in. Oh, and there's some error here. Okay, I got some problem with S&P. I cannot click it in, so I can leave it there. All right, that will be all for today. Hope you guys enjoyed this session. I'm so sorry for the S&P 500, but still, my point is this: today is a book profit day. Okay, so take some profit off the table, enjoy yourself, and happy weekend. I'll see you guys again on coming Monday. This is Cal signing off. Bye-bye.